Ladies and gentlemen, good day and welcome to Navneet Education Q2 FY24 earnings conference call, hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Lilladher. Thank you, and over to you, sir.
Thanks, Seema. Good morning, everyone. On behalf of Prabhudas Lilladher, I welcome you all to the 2Q FY24 earnings call of Navneet Education Limited. We have with us the management represented by Mr. Sunil Gala, MD, and Mr. Kalpesh Dedia, who is the CFO. I would now like to hand over the call to the management for opening remarks, and maybe after that we can open the floor for Q&A. Over to you, Kalpesh bhai.
Thank you. Good morning and very warm welcome to everyone present on the call. Along with me, I have Mr. Sunil Gala, our Managing Director, and SGA, our Investor Relations Advisor. Hope you all have received our investor presentation by now. For those who have not, you can review the same on stock exchanges and the company website. Mr. Gala has a bad throat, so I am speaking on his behalf. Let me start the call with opening remarks. Let me start by explaining the plan to merge our step-down subsidiary, Genex Students Private Limited, and demerging of EdTech business of Navneet Future Tech Limited into Navneet Education Limited. This composite scheme of arrangement simplifies our company structure and enhances collaboration between businesses. It is in line with our goal of offering combined physical education solutions, which will drive the growth of both our traditional print business and digital offerings. Additionally, it saves cost and by utilizing the resources and workforce of Navneet Education Limited for both product lines. We believe that the future of education is
I'm sorry to interrupt. Kalpesh, sir? Ladies and gentlemen, please stay connected while we reconnect the line from Mr. Kalpesh. Ladies and gentlemen, thank you for holding the line. We got Mr. Kalpesh connected, so please go ahead.
Let me start again. Sorry for this interruption. Let me start by explaining the plan to merge our step-down subsidiary, Genex Students Private Limited, and demerging of EdTech business of Navneet Future Tech Limited into Navneet Education Limited. This composite scheme of arrangement simplifies our company structure and enhances collaboration between businesses. It's in line with our goal of offering combined physical education solutions, which will drive the growth of both our traditional print business and digital offerings. Additionally, it saves the cost by utilizing resources and workforce of Navneet Education Limited for both the product lines. We believe that the future of EdTech business is closely linked to combining of EdTech offerings with our physical book business. This strategic approach aligns with our broader vision of providing a seamless path for the expansion and diversification of traditional publication business and innovative digital product in the EdTech sector. We will continue to judiciously invest in the segment and adapt to its evolving demands. We are confident that our efforts will lead to further growth and success in serving the needs of schools and students. Now coming to the segment-wise performances. Let me take first publication business. During the second quarter, our publication business experienced a degrowth of 48%. As our publication business is currently facing a period of decline, the company has proactively conducted a thorough on-ground survey to gain a more comprehensive understanding of the underlying factors contributing to this degrowth. There are several notable factors that have exerted a negative influence on our sales volume in the recent quarter. Firstly, Prolonged unchanged syllabus in the states of Gujarat and Maharashtra, where we have substantial presence, has been a pivotal factor in the declining sales volume. This stagnant syllabus landscape has inadvertently boosted the sales of second-hand books, which have emerged as our primary competitor in the market. Moreover, an unforeseen surge in paper prices has pushed up the MRP of our books. Consequently, these higher book prices have led to a surge in demand for the more affordably priced second-hand books, ultimately resulting in a noticeable increase in sales return during the quarter. Also, in the state of Gujarat, there have been alteration in the paper pattern for specific grades. The examination book associated with these changes, typically released in second quarter of the year, have now been rescheduled for the third quarter. Moreover, we believe that this was one-off quarter, but since the situation is still evolving, and hence for the remainder part of the year, we would not like to provide any guidance for the publication business vertical. However, the division shall see gradual volume growth during syllabus change over next couple of years. During the first half, the revenue from Indianica, our subsidiary offering CBSE textbooks, stood at 4.1 crore as compared to 8.7 crore in H1 FY23. We firmly believe that our capacity to grow CBSE business, as there is a huge potential to cater to more number of schools and existing schools with more number of titles. Just to reiterate, major business in CBSE textbooks happens in Q4, and our company is poised to get good orders in FY24. Now coming to our domestic stationery business. Our domestic stationery business revenue for Q2 FY24 remained flattish year-on-year to 46 crore. In the domestic stationery market, Q4 and Q1 have traditionally been the strongest period for our business. However, with the introduction of various premium product categories, we anticipate positive momentum to continue throughout the year. This sustains trend and indicative of our strong brand equity and continued trust that our customer places on Navneet. We are optimistic about our future. We aim for a strong growth of 12 to 15% and plan to build on our stationery business's strong foundation. Our dedication to provide high quality stationery products that meet diverse customer needs is our focus, and we look forward to delivering value to our customers and stakeholders in the coming years. Now coming to export stationery business. Our export stationery business revenue for Q2 for 24 has remained flat to rupees 144 crores. Our export stationery division has consistently delivered strong results owing to Navneet's robust reputation and enduring partnership with major retail outlets in the United States and around the world. These partnerships have been built on trust and reliability, further solidifying our presence in international markets. Moreover, our ability to innovate and introduce newer product categories in both paper and non-paper segment have been a key driver behind the substantial growth in our export revenues. Despite facing the prospect of an anti-dumping duty review in the United States for one of our product category, we anticipate a reasonable growth in FY24. This anticipated growth is a testament of our commitment to diversify our product offerings, explore new markets, and continue to adapt to the ever-evolving needs of our global customers. As we navigate through these challenges and opportunities, our export stationery division remains a cornerstone of our business success, and we look forward to continue to serve our international customers and excellent and newer products. Our investment in K12 Techno during the quarter, the company has raised an undisclosed amount from Mercury investors. Post these transactions, NEL stake in K12 Techno stands at 20.25% on fully diluted basis. Now let me take through the financial highlights. Firstly, I'll talk on standalone performance. Revenue for Q2 FY24 stood at 261 crore as compared to 326 crore in the same period last year. Revenue for H1 FY24 grew by 4% to rupees 1,046 crore as compared to 1,009 crores in the same period last year. EBITDA for Q2 FY24 stood at rupees 16 crore as compared to rupees 52 crores in the same period last year. EBITDA for H1 FY24 stood at rupees 239 crore as compared to rupees 259 crores in the same period last year. PAT for the Q2 FY24 stood at 29 crore as compared to rupees 32 crore in the same period last year. Just to give additional information, Q2 FY24 PAT includes rupees 30 crore towards profit on sale of property at Guma, Gujarat. PAT for H1 FY24 stood at 187 crore as compared to rupees 182 crore in the same period last year. Now coming to consolidated performance highlights. Consolidated revenue for Q2 FY24 stood at rupees 266 crore as compared to 330 crores in the same period last year. H1 FY24 consolidated revenue stood at 1057 crore as compared to 1024 crores in the same period last year. EBITDA loss for Q2 FY24 was rupees 4 crore as compared to a profit of rupees 33 crore in the same period last year at consolidated level. EBITDA for H1 FY24 was rupees 205 crore as compared to 228 crores in the same period last year. Consolidated PAT for Q2 FY24 was rupees 36 crore as compared to loss of rupees 2 crore in the same period last year. And PAT for H1 FY24 was 181 crore as compared to rupees 150 crore in the same period last year. Thank you. Now I open the floor for Q&A session. Over to you, Jinesh.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Amit Khetan from Lebanon Capital. Please go ahead, sir.
Hi, thanks for taking my question. So if we look at the half-year numbers, right, for the publication business, I think it's about up by 1 to 2%. What would this number be if we exclude the impact of the Gujarat examination books that you mentioned have been shifted to the third quarter? And if you could break down that percentage into volume and price growth.
Hello, Mr. Kalpesh.
Yeah, sorry.
Kalpesh, let me take this.
Yeah.
Hello, everyone. This is Sunil Gala. I'm sorry I could not give my speech as I'm little under the weather. But now I am here to answer all the questions that you will have. So, Amit, the loss of revenue on account of this Gujarat is around 20 odd crore that we could not do in the second quarter and is shifted to the third quarter. So, third quarter will have positive impact to that extent.
Got it. And what would be the volume growth on a like-for-like basis compared to last year H1?
There is volume is actually degrown by around 10 odd %.
Got it. So what is the issue here? Like, is it a case of students not returning to private schools, or that they have returned to the private schools, but because of inflation and depressed incomes, they are buying second-hand books instead of new books?
So as mentioned by Kalpesh in his speech, the major impact is in the guide category, where the price of a new book and the price of a second-hand book, which was published last year or a year before, the difference was so large that on our detailed survey, we realized that students are opted more for second-hand books, not for new book. And as Kalpesh also mentioned, that this is the fag end of the curriculum. It means the content-wise, the old books or a new book would be more or less the same, and therefore more students opted for second-hand book this time.
Got it. So last question is
problem. Well, I just wanted to reiterate that students have come back to private schools, but this was because of this big price difference, students have opted for second-hand.
Got it. So the path to improvement here is basically introduction of the new curriculum, or do you also intend to take, now that paper prices are down, do you intend to take price rationalization to drive volume growth?
So paper prices per se did come down in the month of June, July. Again, they have started firming up for some categories. So we are not really going to revisit on the MRP of our product, but instead now we are seriously evaluating introducing various digital features in a book which helps students more in learning process. So that way we will try and retain the volumes going forward.
Got it. And any visibility on the implementation of the new curriculum?
Yeah, so both the states, our concerned state, Maharashtra and Gujarat, they have announced. So next year they are changing curriculum of grade 1 and 2, and thereafter they will announce, next year they will announce for the subsequent years. They have not announced the whole cycle as of now.
Great, thank you.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to ask a question, please press star and 1 on your touchtone phone. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead, sir.
Yeah, hi. Good morning. So my first question was on the future tech business. Okay. So first is on Navneet Future Tech. Have we completely disbanded it? And see, we were trying to build a B2B business. Okay. So now what happens to that? And means just what changes are we making in the business model on that? Secondly, related to that only, we stated in the last quarter that market conditions were not right, and hence we need to relook at the business. But my perception was of Navneet was that it wants to build sustainable, profitable business in various segments. Are not we becoming like a private equity or a new age company which is trying to build a business to sell to someone else? Is there a change in the way or the philosophy of the organization on how it looks at the opportunities? So first question is this.
Himanshu, can I request to ask this question again, because in between there was some interruption.
Okay, I'll repeat my question, sir. First is on Navneet Future Tech. Okay, have we completely disbanded it? So we were trying to build a business which was B2B focused. Okay, so and there were two things which we were doing. Which one was we were trying to go to schools, and the other was trying to go to the tuition teachers and tuition classes and all that. So what retains, what goes, and what are the changes in business model going to happen? So some clarity on that. Secondly, we stated in the last quarter's releases that the market conditions were not right, and hence we need to relook at this business. Okay. But my perception was Navneet wants to build a sustainable, profitable business in various segments. Okay. Are not we trying to become like a private equity or a new age company where we are trying to build businesses to sell to someone else? Have the core philosophy of the group changed in looking at the opportunities? So just this question on the new age businesses, what we are trying to build. And
yeah, thanks Himanshu for this straight question. So Navneet Future Tech, I might have mentioned that in my earlier speeches also, that two businesses. One is B2B, that is school business, and tuition teacher businesses, that we are continuing as it is. Only thing, we are merging that with Navneet, because going forward, as we clearly see, selling physical books independently and selling digital solutions independently is not making sense at all. And therefore, that is the main reason of merging these businesses with Navneet. So finally, going forward, Navneet will be offering physical books and digital solutions together to the schools. And we strongly believe that going forward, schools will have to use digital platforms and digital solutions in the classroom to remain in line with the expectation of NEP 2020. And keeping that in mind, Navneet will continue to invest in school business, digital business for the school. And similarly, for tuition teachers, also we have decided to adopt the same method, which is with marketing of physical books in the coaching classes. We will be offering them the digital solution as well. So we will not unnecessarily have two different teams going to the same customer, and we'll try and sell this. So there is not any change in that thought process now, and we realize that selling this independently does not make sense. So as far as your point on whether we are trying to act as a private equity investor, no, sir, this is a long-term plan for the group. Being in the content business for so many years, we would like to offer the content as customer requires, and no doubt the initial phase of providing digital content is not really proving to be on a profitable side yet, but long term we are very clear that digital and physical solutions will go hand in hand, and that will bring success to the company.
Thanks for your detailed reply. Just one suggestion, okay, or something. I was looking at various other countries, US and European countries, where online or digital business is there, okay, in schools, okay. What I saw was most of the publishing companies were not into the digital business, okay, and the companies which had great success on the digital side were selling to schools, okay, were not publishing companies. Can you elaborate on why this happened, and what do you think globally why publishing companies did not get that much success in that business?
Yes, your information is partly correct that the original publishers never ventured into digital, and the only reason was the the digital business to understand itself was taking very long. It required huge investments, which the private publishers, through their hard-earned money, never thought of investing back into the technology business or digital business. Versus highly capitalized companies, they came up with some digital solution and started offering to the schools. So that scenario is across the globe. You are right. But having said that, many publishers, so just to give you example of Pearson's, internationally they have more or less stopped providing only physical product. And that is the reason of they selling their business in India. Likewise, there are a couple of other American publishers also that they have started offering these combined products to the schools. So now that the original publishers also have realized that selling just physical books is not going to be right for the schools, and they will need digital, and therefore publishers have started, and similarly in India also publishers cannot avoid digital solution, providing digital solution also to the schools.
Thanks, again. One last question on this topic, and then I'll join back in the queue. After so many years into looking at this business of digital and many experiments, what in your opinion is the right way to approach it? And what will is required to become a leader or get a great success in the digital business, especially focusing on schools? Okay.
So we are very clear as far as SSE schools are concerned, we are not investing heavily into digital. There we will focus more and more on digital or physical books, but through some intervention of digital through the book. That we are very clear, and so we are not heavily investing in digital as far as SSE medium is concerned. But the CBSE business, where the adoption levels are quite high in the school, and there we are continuously investing money. And the best solution would be whichever company provides not only digital solution by way of LMS and ERP, but also will have to provide physical books, teacher training, and any other experimental materials that they need. If all put combined offer to the school, will be successful company going forward. And with that clarity, Navneet also moving in that direction.
Thanks. I'll join back in the queue.
Thank you, sir. The next question is from the line of Amit Doshi from Care PMS. Please go ahead.
Yeah, thank you. So you mentioned that the reduction in sales of publication business owing to higher prices and higher sales return. Do you believe there could be a reason of shift to other publication as well? I mean, students referring or buying books of other publications.
So, as mentioned in our speech, we did a detailed study among retailers, wholesalers across these two states, and it was clear that the brand shift has not happened. Only the choice of a second-hand book preferred over the physical, the new book, that only impacted sales of our one major category, which is a guide category. So we are very confident that brand shift has not happened.
Okay, thank you. And second, regarding this stationery business where the US had levied this anti-dumping duty on one of our products, I believe that we had probably planned or made some alternate arrangement for exporting. So was there in place? It did not happen. If you can just slightly, because it still remains a reason of stationery sales impact.
So that category which got impacted was between 40-50 crore rupees business. As per our plan, we have looked at it and it is under process. So from next year, we'll have these sales come back for sure.
Oh, acha. So for example, that the first quarter, what we lost is lost. It's not that it gets postponed to Q2 or Q3.
This is back to school business, which is a seasonal business. We cannot supply that after the schools reopen in the state of United States.
Okay, got it.
Yeah.
Understood. And there's a mention in the presentation that in non-paper stationery business, we are probably coming out with new products and some R&D, etc. is being carried out. So stationery, so is it based on some orders that we have received, or we on our own creating new products for launching or getting them approved and then probably start supplying that? So what is the flow of events?
So as we have been talking overall at a country level, there is huge demand by not only our present customers but many customers for supplying various other stationery products as well beyond paper. That request is coming from most of our buyers, probably because they want to shift their sources majorly from India. And we have given them satisfactory supplies over so many years. They are requesting us to manage that. With that requirement, we then decided to create the new product categories, which we have already started with. Part of it, supplies also have started, but initial phase, the volumes are always low. Once they get more clarity and confirmation that we are able to supply quality products, they will increase the volumes. So that way, we have decided to introduce various category of products in stationery category.
Primarily for exports.
Primarily for exports, but now we have also decided, since we will be putting up plants also for this, we are definite to introduce them in India as well.
Okay. So what kind of capex that we are planning in, putting up a plant?
So going forward, major capex to start with will be in land and building, and that will be around 50 odd crores to start with, and then over a period of next 5 years, additional 50 to 60 crores in just plant and machinery. As far as machinery, land and building. As far as machineries are concerned, we believe that it does not require huge capex. These are all small machinery that we have to invest. So that will be hardly 20-30 crore every year that we may have to invest for next 5 years. And in these 5 years, we will, I'm very sure that we will introduce minimum 3 to 4 different new category of products for exports and then in domestic markets.
Okay, and the top line from these investments would be in, say, for example, in asset turnover ratio could be 3-4 times, or how would that work?
It starts by just
at full potential.
At full potential, yes. It will be minimum 4 times of our investments.
Okay, fine. And last question on the publication, while you mentioned that you don't intend to give any guidance owing to this Q2 event and this shift of syllabus, but on as far as the CBSE or the Indianica part is concerned, which the core is going to come on Q4, do you foresee any changes in that, or you won't want to even give a guidance even for that business, the Indianica CBSE part?
No, that business we are very clear, and we are for the year, again, in double digit, we will definitely grow, that we are confident of.
Okay. Fair enough. Thank you so much.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. We take the next question from the line of Sonal from Go Ahead. Please go ahead.
Sir, I wanted to understand, let's say from next year, I'm sure while, you're shutting down or raising your technology business, there would be payoffs, salaries, severances, and reorganization takes its own sweet time, But from next year onwards, what kind of losses do you see in your technology part of the business, and even beyond that, if there's any kind of goalpost you have made internally which is possible to share right now?
So independently, we are not going to show digital investments or losses separately. Reasons I already mentioned, that now physical books and digital solution will go hand in hand. And many physical product also will have various digital solutions. For an example, by way of QR code. Now, QR code, once student scans, will have lots of features that students will be able to access to enhance their learning process. So, but having said that, as far as digital is concerned, this year we may end up, as you rightly said, because of the layoffs and severance, there is little higher expenditure to the extent of 45 odd crore. Next year, that figure will definitely come down to around 30 odd crore, and thereafter that is likely to go further down and down as the revenue from digital business also increases.
So, sir, 30 crore is the expense or it's the loss?
It will be the loss.
So despite you shutting down all these businesses, you think you still incur a 30 crore loss next year?
Sonal, as I mentioned, one major business, B2B school curriculum business that we have developed, and we are very clear that for the better future of the company, we have to continue that to offer together with the physical books. But now the expense to not only develop this product with new curriculums coming in every year, and creating awareness of that. That is really still giving us more expenses. So this is purely we are investing for long term. Maybe shown as a losses for every year, but we need to continue. So major expense will be on account of this B2B business that we will continue to do.
Understood. And sir, did I hear you correctly that there is no plan to cut the prices of books next year, or do you plan to cut the prices to get back demand?
So for very small category of products, particularly of regional medium, we may reduce the prices by around 5%, but not otherwise, because we are not very clear ourselves, neither the paper industry is very clear what are the likelihood of paper prices going forward. So we don't want to take any chance and build inventory right now and reduce the price of a product and then finally end up paying more in the month of February, March, April. That scenario we do not want. So thankfully, the paper prices have not gone back to the peak level that it had reached in March, April. But few of the paper mills are talking about increasing the prices in the third quarter, and therefore we would not like to take that chance and do not want to reduce the MRP of a product.
So if I understood, the real tailwinds to your publication business will start from 2026, when the course curriculum hopefully would change in a meaningful way.
That's right.
Understood. And sir, on the export side, do you have any 5-year or 3-year growth rate plan? Let's say, FY, 24 to FY27 or FY24 to 29. Anything internally you have kept as a goalpost for yourself, or any plans to share this with us at some point of time, if not now?
Yeah, maybe by last quarter we'll have lots of clarity in terms of newer categories and the infrastructure that we will decide to invest. With that clarity, only we'll be able to give more guidance. But generally, as far as exports and domestic both businesses are concerned, we are very clear that we should aim to grow around 15% every year.
So exports also 15%?
Yes, please.
Not 20-25% kind of targets. Okay.
See, once our newer categories are well accepted, then that scenario will be different. So, but let me give good, clear guidance when we really end the year.
Understood, sir. And sir, on the school side of the business, possible for you to share what will be the fair value of this school business now with your reduced stake and increased valuation?
Yeah, it is approximately 800 crores now.
Okay. And this SFA, any recent deal in that company, or do you think you made a good investment, and would you see some nice gains there also, or it's too early to tell?
It is, of course, an early, but in next 6 to 8 months' time, that company will have to go into the market to raise, because the type of traction or the growth that they are seeing, they will require more funds. But so in 6 to 8 months' time, I'm sure new value of the company will definitely be seen. But having said that, they have got, again, this year also good government contracts, and their SFA championship in 4 cities have already gone very, very well, and they have plans to complete in 10 cities in the current year. So I'm sure they are creating excellent IP for themselves, and looking at that, good investment of investors will get attracted.
And sir, once this course curriculum changes happen, let's say, they happen over a 3-year period, 2026 to 29, is that a fair assessment, or, what are your thoughts? When do you expect bulk of these changes in the publication curriculum, due to NEP happen,
So, as I said, in Maharashtra, Gujarat, grade 1 and 2 will be changing next year, and in thereafter 3 years, the respective state governments will have to change curriculum of all the grades. So by 27, 24, 25, by 28, whole curriculum will get changed.
So, sir, in this 24 to 28 phase, what kind of growth could publication business face? Assuming other things obviously normalize over a period of time.
Historically, if we had seen on a CAGR basis, we do achieve around 15% growth. In 1 year, we may just see 10% growth, and in some year, we may see 20-25% growth, depending on the grade for which curriculum is changing. So, but on a CAGR basis, we can say 15% growth will be definitely possible.
And you will also benefit because perhaps this time the course change is coming after a long time, unlike the normal cycle, and therefore the second-hand composition of the market is bigger than what it would have been historically for you, right? So this time maybe the delta will be a little higher.
Base became low pre-curriculum change, so delta will be seen little higher.
And sir, lastly, on the taxation side, because you're merging and you have accumulated technology losses, what kind of tax rate should we expect for Navneet for 2025 and 26?
So it will be only 25 only, because once we get NCLT order, we will have to give effect to that. So, Kalpesh, can you throw light what percentage could that be?
So it will be, Sonal, it would be 25% only, but initial benefit will get of accumulated losses in first year.
No, so you're saying 2025 the tax rate would be 25%?
Yes.
Is that what you said?
No.
So 25. So see, this financial year 24 will have lower tax rate because of merging effect. But after that, it will be normal 25%. Yeah, but subject to adjustment of losses of what Mr. Gala spoke about, 30 crore, 30 crore.
So what the accumulated losses, Sonal, of between 80 to 100 crore will get adjusted. So to that extent, we'll save on taxes.
But it won't happen in 24, right? These things take time. Or you
25. It will happen in 25.
Yeah, that's what I was asking, sir. Because of this, your tax rate would be like what in 2025? It should fall, because of this accumulated losses, right?
It should fall. So effective payment will be less. Say about 20 odd crores.
Okay. Thank you.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. We take the next question from the line of Samarth, an individual investor. Please go ahead, sir.
Yeah, good morning, sir. Thank you for the opportunity. I hope I'm audible.
Yes, please.
Yeah, so, sir, do we import any Indonesian paper? And I think it is cheaper compared to the Indian paper mills, which they are selling at. So if you could, throw some light on that, or is it on parity with the Indian paper mills? And just if you could give a general trend of how we expect paper prices to move going forward. So that was the first question.
Yeah. So yeah, we do import now from overseas, particularly Asian countries, and we are getting some advantage. But having given order, even Indian paper mills also started reducing their prices. So net, yeah, we may have 4-5% benefit in the order that we have placed this year. And going forward, which I mentioned in between also, the scenario at paper mills is quite different with A-grade paper mill and B-grade paper mill. So for low grammage paper that we use, the price pressure will always remain because there are very few mills that produces low grammage paper. But for higher grammage paper, we believe the prices will remain soft and will not reach back to the peak level that it had reached.
Okay. And second question was regarding our stake in K12 Techno. If you could quantify the value of our stake, if that's possible.
Quantify the value of?
Our stake in K12 Techno. I believe it was around 640 crores before, when it was around 22%. So what is it now? What is the value of that stake?
Yeah, percentage is now 20.25 and value is approximately 800 crore.
800 crores.
Yes, please.
Yeah, and sir, are we, looking to pare down or sell our stake in K12 Techno, because that would, unlock a lot of value? Do you see that happening anytime soon?
No clear thought on that. We will continuously evaluate the progress of that business and will decide. So in next couple of years, you will see something happening there as well.
Right, sir. All right. Thank you so much. That was all from my side, and wishing you a very speedy recovery regarding your health. So thank you.
Thanks.
Thank you. The next question is from the line of Kunal Mehta from Equirius Wealth. Please go ahead, sir.
Yeah. So thanks for the opportunity. Most of the questions got answered by the you answered that. Just one thing is, would you in earlier calls you said FY24 about 1900 crores, or you will do the top line. Do you, obviously it will get revised, so any guidance that you would want to give?
Unfortunately, no. We would like to remain awake by giving guidance for this little unprecedented year that we are facing, and therefore we would not like to give any guidance.
Fine. Thanks a lot.
Thank you, sir. The next question is from the line of Keshav Garg from Counter PMS. Please go ahead, sir.
Sir, I'm trying to understand that if we look at our standalone numbers for
Hello, Kunal.
Hello, Mr. Keshav. Hello, Mr. Keshav. Can you hear us?
Yes.
So please go ahead with your question. The line for the current questionnaire looks like it's disconnected. We move on to the next question from the line of Mr. Himanshu Upadhyay from O3 Capital. Please go ahead, sir.
See, my first it is again regarding the issues which we are facing in publication business. See, till Q1 in Concall also, we were not seeing any challenges in the publication, okay, or nothing was very visible. And in this quarter, we stated that we faced bigger issues, okay, and we needed to do a market survey to understand the situation, okay. So how come it came as such a big surprise, okay, or what led to? Obviously, numbers are weaker than what you might have expected, but because we are in the market every day, and we would be observing even in the month of July and August when the call happened. How could such a surprise came to us? Okay. So that was the
let me answer that. See, every year Q2 we do receive continuous repeat orders from whole part of Maharashtra and Gujarat. This year, when we suddenly saw that orders are not coming in, therefore that was the reason we had to go into detailed study. And that time we realized that the inventory level at the retail also was little high because students preferred second-hand book, and then thereafter even returns started coming in. Now, at this point of time, if retailers were not able to sell the full volume that they had, we couldn't say no to them because the demand did not come at all. So, based on past history, retailers and wholesalers did call for the quantities, but unfortunately, we got more returns also back from the market. So this we didn't knew on closing of the first quarter that the sudden higher inventory at the retail would be there, and therefore we could not comment that time.
And one final thing, if we reduce the prices of newer books, even a small proportion, will there not be a issue because the older books will be at a higher price and the newer will be at a lower price in the market? And what do we do with that inventory? Because the inventory so do we need to take a write-off on the inventory, or do we need to reduce the price of the inventory if we want to liquidate it? Some thoughts on that?
No. See, in this situation, of course, reverse situation will come if at all we decide to reduce the prices, but upward situation has come many times in our history. So that understanding and that mechanism we already have in place. We do not, first of all, print the new title or the new series till the time we see that the volumes in the whole market is emptied. So that way we play very safe, and we have right mechanism to do that.
Okay. Thank you so much.
We have never written off any inventory because of this confusion of price of a product.
Okay. Thank you so much.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. We take the next question from the line of Mr. Amit Doshi from Care PMS. Please go ahead, sir.
Yeah, just one question on the K12 deal. So our stake got reduced by 10%. So would it be fair to assume that the new infusion in the company, apart from the payment made to the exiting investor Sequoia Capital, was 350 crores plus?
No, the primary infusion was only around 50-60 crore.
So then the stake got reduced by 10%.
Sorry. So I should have missed that. So last year when our existing shareholders invested money in the company, that time they invested only 2/3 of the commitment. So 1/3 got invested in the Q2 of this year. So that was at a different valuation. And the new valuation at which the secondary also happened and primary, small part of primary also happened, was very small. But you are right, in Q2 we had 2 investments come in, and altogether 10% got reduced.
So 50 crore is only the new part, the Kedara capital which is sought to be done.
That's right.
Okay, and that percentage would have been a different percentage. It's not a 10%. Year one.
Yeah. That was not 10%.
Okay. Thank you, and all the best.
Thank you, sir. The next question is from the line of Karthik Kada from Multiple Wealth Management. Please go ahead, sir.
Yeah, thank you for this opportunity. Just wanted to understand, so this issue of second hand is nothing new. So what happened, in the sense we didn't anticipate, because last year we sold more fresh books, so it was natural that second hand would come back into play. So we didn't anticipate that, or we anticipated a lesser impact of second hand. What went wrong?
No, so over last so many years, such a price variation of a new book and old book was never there. All this was all because of the last year's paper prices. So just to give you an example by way of a number, if last year we had sold a copy at 70 rupees, this year we might have priced it at 90-95 rupees. Now that 70 rupees second-hand book can be sold at 40-45 rupees versus a 90 rupees price. This price gap was never seen in any of our earlier years. And because of that, the usage of second-hand book increased, that we realized in a detailed survey.
Okay, okay. And how are the prices trending now? So I joined late, so I might have missed that. So how are the paper prices trending now, and what can be the impact?
So few of the paper mills have increased the prices again. No doubt they have not yet reached to the peak level that were there. So overall, there is a mixed opinion from the paper mills itself. Few of them are believing that prices are likely to go up still further, but no one is saying that it will reach back to the peak level. So that way we are in a comfortable position.
Okay, okay. Thank you.
Thank you. We take the next question from the line of Mr. Jinesh. Please go ahead, sir.
Yeah. So only one question from my side. I mean, you clearly highlighted the reasons for slow growth in publication business for 1H. But again, I mean, if I look at your commentary for FY25, you highlighted that only grade 1 and grade 2 are due for a syllabus change, which technically means that the prevalence of second-hand books even in FY25 perhaps may be higher. And given the price sensitiveness which the students have reflected at least in 2Q, what kind of growth do we foresee in 25? I understand that you are kind of a bit shy with respect to giving guidance, but are we anticipating a growth given the fact that only 2 standards are due for a syllabus change?
So of course, as we are not giving guidance for this year, as well as I will avoid giving guidance for next year till the time we implement certain strategy in the market and see to it that the fresh stock is being consumed faster. And one of the activity that we are doing, as I already mentioned, is the introduction or introducing digital component in a physical book. That is underway, and the separate team has been set up to do that. So with that, lot many features would get added to a book, even though curriculum has not changed, and we will create awareness accordingly in the market. That should help us increase the new book volume. That efforts are there, but on guidance, I will refrain right now till the time we introduce several measures to increase the volume.
Sure. So one last question. You also highlighted that sales return was higher in this quarter. So as you mentioned that the revenue loss because of shift in the paper pattern was about 20 crores odd. Can you highlight what was the quantum of higher sales return which has happened in this quarter, and will this change the provisioning for the future years with respect to sales return?
We still believe it is one of the instance that has happened. It cannot happen every year, and therefore we need not change the provisioning of sales return. But as far as the number in Q2 is concerned, we were anticipating around 20 odd crore of returns versus we received around 36 crores of return, and that really reduced our sales for Q2.
Got that. And sir, just sorry, one last bit from my side. This employee cost number, which has been in this band of about 60 crores odd for the last 4 quarters, given that we'll slow down on the edtech side, are we foreseeing any material change in the employee cost, given the fact that there could be some redundancy which might kick in?
Yeah, definitely at Concall level, the employee cost will come down because of the close of various two edtech businesses, and also reducing the central level team, which were very high cost team that we had. So because with that, there will be reduction in the employee cost at a Concall level. At a standalone level, of course, it is in line with every year's trend.
Sure, sir. Thank you so much and all the best for the upcoming quarter.
Thanks, Jinan.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Yeah, so Kalpesh, let me take that.
Yeah.
Yeah, so once again, I'm very sorry for my, since I'm little under weather, I could not give my speech, but I take this opportunity to thank everyone for joining the call. I hope we have been able to address all your queries, and for any further information, kindly get in touch with us or our strategic growth advisor, our investor relation advisors. Thank you once again. Over to you, Jinan.
Thank you, sir. On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.